Hi guys, this is Lee with the Market Sense for the week of August 11th, 2020. The charts in this presentation come from the Trade Navigator software that's provided by Gettess. And our weekly bond market chart here is showing a little sign of weakness finally. I've been saying this move up, which is expected after this move down, was not going to be able to really blow off because interest rates simply can't go a whole lot lower without some sort of calamity. And so now they've turned down and turned down very strongly. They turned down strongly while stocks were rallying up to threaten the new highs. Stocks weakened in the afternoon and bonds recovered, but not a lot. And this happened Tuesday, by the way. So not recovering much is a little frightening. We were kind of expecting the 182.20 area would be resistance this week, and they haven't been anywhere near that. Uh, this leaves this 180.10 area as potential support, and they seem to be cutting through that really, really easily. There's nothing else left here on this chart except that mid-Keltner channel. Hello, right there, the mid-Keltner channel, which is down in the 177 area. I think it's 77.0405. There is something in the mid 178, 178, 16, 17. There's something on the monthly chart that could hold as well. Um, I, we go way back here to March. We had this extreme move up and then down here, and I said then I didn't think those extremes will be exceeded for the rest of the year, and I still don't. This weakening a little bit isn't terribly surprising because I just didn't think the interest rates will continue to go down, the opposite of bonds, without some sort of calamity, and we don't have a calamity right now. So this coming back off makes sense. I really think they're probably just going to go back to in the middle of this big, long congestion area here. But, we'll keep an eye on them because they certainly are showing some weakness. But again, 77.05 is the next target here, and there is the mid 178 range on the monthly may stop them from even getting there. So be interesting to see what they come up with. Stocks, this entire range on the weekly here basically all happened Tuesday. And mid-afternoon, they were still trading over 33.74 before breaking all the way down here into the 33.19 area just in the afternoon. It was a real big sell-off, and the only reason people could find was Mitch McConnell saying there's no progress in talks to do anything about the unemployment. And, big surprise. Did anybody think that? I thought we had executive action to take care of that anyway. So, I don't know, very surprising, sort of a dump on nothing. But while all of that sounds really bad, they haven't done any damage. They haven't broken anything. The support right here, the upper moving average, is up just above 3,300. Let's call it 3,302. That's the support that should hold if they're going to trend up strongly still. Now, because they've already traded up here to resistance, this was 33.78 and they've been to 33.79. So I can't get myself to buy this support if they get down there. I don't think I can do that. But that's the support that we thought would hold if they were going to continue to trend up, and they haven't broken that. So it's can't get excited about anything really. 32.62 is the middle moving average. That might be more reasonable since they've already traded the resistance. But even down here at 32.12, the lower moving average, that wouldn't look bad at all. That would just put them back near this high that they broke out from. No big deal. So weakness here, it could be an indication of something, but you can't get too excited about it just yet. This is kind of a time for stocks to be weak, especially in an election year. But all things considered, I think they actually still look pretty good. So the important thing is seeing if they can hold one of these upper support levels. They may hold the 3,300 level. I don't think I can buy them anyway, but they could hold it. And 32.62 is a little more attractive if they get there. I'd be thinking about taking a look at that. So that's what we've got for you today. I hope you can find something profitable to get yourself